In this video, we will talk about Microvast, why I think its price decreased, and what are my recommendations given the circumstances. If you are interested in more stock analysis videos, please check out my channel where I share my analysis on many other companies. If you like what you see, please like, comment, and subscribe to my channel. Recently, Microvast announced that it is going to merge with the special acquisition company Tuscan Holdings. Following the news, the stock price of the SPAC rushed to a new high at almost $25 at one point. However, almost immediately afterwards, the price began to decrease. At the moment, it seems to be going back towards the $21 and even $20 level, which is a relatively fast price decline. This had many people wondering whether it is a good moment to buy in, and for those who have already a position in the stock, whether it is a signal to unwind some of the exposure. First, we have to look at the current market conditions. The stock has had a massive price surge over the past few days, and regardless how much hope, greed, and hype investors can pack into the stock, we have to say that there is a huge premium that has been built up over the past few months, and for many investors, this is a lot of unrealized gains accumulated over all this time. So it is natural that they want to unwind some of their exposure in the stock. Keep in mind that Microvast has a large number of institutional investors. They have analysts who are paid full-time to scan the market and to identify stock opportunities. But when I say stock opportunities, it both involves the buy and sell sides of things. Not only should they find good stocks to buy, but they also have to make sure that their positions can be sold in their advantage. So, much like the way they were bought based on fundamentals and market sentiments, the shares are now liquidated by some of those institutional investors, the so-called whales in the industry. As of yet, there is no major news from Microvast, so I believe that the only tangible reason why the price declined is because many investors decide to lock in their profits. Now, it is important to remember that the current market volatility in EV and startup scenes are far from normal, and is probably the result of both the global pandemic and the legislations around the world that will limit combustion vehicles as early as 2030. Ultimately, the capital has to go somewhere, and given that stock prices are based off demand and supply, well, this is why we see such a volatility and hype in the EV and SPAC scenes in 2020 and onwards. Microvast is a startup that has a proven track record and existing products that have been deployed in the real world. This is why its stock has so much value in the eyes of investors. Based on these observations, I think that the nature of the current movement is a pullback because many investors simply decided to lock in their profits when the stock price is at a historical high. Some of them may choose to come back later when the price falls below a certain point, and others may choose to move on to other opportunities. After all, it is not the only SPAC in town. In fact, the current situation with Microvast is a very good example of the importance of exposure control. For any portfolio that is well built, the stock should take no more than 3% of the overall holdings. Despite all the praise investors have for this company, it is still a startup and has yet to publish any financial data to back up their ambitions. A pullback of a single stock should never cause any problems to the entire portfolio, and should instead be presented as an opportunity to optimize the cost basis. That is, of course, given the fundamentals do not change. Also, we have to fully appreciate what the terms profit-taking may bring to a stock. It reminds me of what happened with Hyliion. Hyliion used to be one of those hot stocks that everyone was talking about, until the fall of 2020, when many decided to lock in their accumulated profits and sell their Hyliion shares. This caused a massive price correction, and until this day, the stock price of Hyliion struggles to go back to previous levels. The same scenario may not necessarily happen with Microvast, but you have to consider the possibility when buying or holding the stock. Again, if the position was not very heavy, you would have the luxury of patience and even building up your position in the lower levels to maximize your profit later. My recommendation for Microvast is to hold your position if you already have one and slowly build it up if you don't. I believe that this company has good value, has a lot of potential to grow larger, and everything is a question of timing and risk tolerance. Based on the current price movements, I would suggest to buy 30% of the stock upfront and 70% for later. This is a modified approach from my previous video. I think that patience and risk control now have a bigger role in trading Microvast, and it is primordial for the position to be structured in a way that you will not be holding the bag. I believe that the short-term price target should be at least $35 and the long-term price target at $50. It is recommended to hold the stock for the next 12 months. In case the company does actually realize $100 million of revenue in 2021, as it was announced by its founder. Thank you for watching. If you like my content and would like to watch my other stock analysis videos, please like, comment, and subscribe to my channel.